You have to trust that the dots will somehow connect in your future. You have to trust in something. Your gut, destiny, life, karma, whatever.
Stay hungry.
Hungry. Foolish. Stay hungry, stay foolish.
This is the eCommerce All-Stars podcast, brought to you with heart by Nadimo.com.
Hey everyone, thanks for joining today's podcast with your host Brandon Moscow, of course. And today I'm excited to have Craig Cody on the line. He's a certified tax coach. Don't hang up. Don't shut this podcast off just yet. I know certified tax coach doesn't ring any excitement bells, but I'm going to tell you something. He's got a great free offer, and he's got some real strong advice and education for you that's going to probably save you a lot of money in your expenses. And just a lot of money in general, like top level tax coaches and those types of people can really do to help you. So today I'm excited about that. Just to give you a little bit of background on Craig, he's also a business owner and a former New York police officer. So you're going to hear a bit of his New York accent in there. And I mean, what a change of worlds going from New York city police officer to the tax world. So thanks for being on the show, Craig.
Well, thank you very much for having me. I'm glad to be here.
Yeah, I think it'll be great. As my listeners know, I'm Canadian, so I don't know a whole lot about the US tax system. And that's what also the biggest reason I wanted to have you on the show. And today I was hoping we could focus a lot on the most expensive tax mistakes that are costing business owners thousands of dollars. And I think that'd be a great way to, show them some of the great value in tax, doing your taxes properly and that sort of thing. But like I said, I'm not a guru in this area, and so that's why I've got you on the show. I was hoping you could kind of circle back and give people a little bit better background on yourself than the one that I did.
Sure. I retired from the New York City Police Department after 17 years as a lieutenant. I went to work for an accounting firm. I got my New York State CPA license. And a number of years ago, I started my own practice. And our focus is on, tax planning and working with business owners. And I'm actually going to offer your listeners a free copy of my recent book, a paperback, which is the 10 most expensive tax mistakes that cost business owners thousands. And we'll give you the link for that at the end, and you can put it in your show notes. But we focus on planning and, helping our clients keep more of what they make. So do it legally.
Yeah, well, so is that what got you into it, the legal aspect of it?
Actually, I got into it because I originally had no real interest in taxes. I wanted to get my CPA because I was retiring, and I wanted to go into financial planning. And I figured I'd set myself apart by getting my CPA license. And I fell in love with taxes, and I was doing a lot of estate planning originally, and saving people a lot of estate taxes. And then the estate tax laws changed, and you need a lot more money to really need to have a plan. And we looked at the stuff we did, and we realized, well, not only are we saving these people estate taxes, but we're saving them income taxes every year. So that's how we got into, tax planning and putting stuff together for business owners. And that's the number one thing we do before we work with any client is do a tax plan and save them some money.
And that's why I wanted to have you on. And the one awesome thing that I've talked to people about on the show before, and actually one of the hottest shows we did was about cutting costs, because a lot of people, they look at, well, how can I grow my revenues and how can I grow, that sort of thing, and grow my sales and all. But sometimes you can generate a higher profit at the end of the year by making some smart decisions in saving yourself some money on the other end.
Right. Well, the biggest mistake that people make is they fail to plan. And, they're going to buy, a car or a truck or a piece of equipment, and they do all this research, and when it comes to taxes, maybe they talk to their CPA once or twice a year. Most people don't. And then, they're giving all this money to the government that they shouldn't be giving, and, if you're in a high tax bracket, that could be maybe one of your biggest expenses after your goods is your overhead costs if you factor in taxes between state and federal taxes, depending on where you live.
Right. So why don't we jump right into it? Maybe you can give us some of those.
Sure. So, I mean, the first is failing to plan. The next is really choosing the wrong business entity, which means, most people, they start a business, whether they're a sole proprietorship or they decide, okay, they want to make themselves more legit and they form an LLC or they form a corporation. And usually that decision is made by having a conversation with their attorney. And the attorney says, okay, form an LLC. And there's no involvement with their CPA in figuring out, okay, what, from a legal perspective, the LLC may be the best way to go. But maybe from a tax perspective, that's not the best way to go. And maybe there's a way we could actually have our cake and eat it and get the best of both worlds. And that just takes a little bit of communication. And I'll hit on communication a lot. It really is about communicating. You need to speak on a regular basis with your CPA or your accountant, because the doctor doesn't call you up to say, how are you feeling today? All right. You need to communicate with the doctor and tell him how you're feeling. You need to talk to your CPA and he needs to talk to you. So choosing the correct business entity could save you a lot of money. After that, it's kind of a new one. It's called qualified business income. And maybe some of your listeners have heard of this, maybe they haven't. But late December this year, a new tax bill was passed. And one of the things in there for small businesses is qualified business income. And basically what qualified business income is, it winds up being a 20% tax deduction off of your net profit from your business. And there's a couple of things that you have to make sure that you've done in order to be able to get that deduction. But, some planning, speaking with your CPA or accountant, you'll be able to maximize that deduction. So for somebody that's making $100,000 or $200,000 a year, that could be a $20,000 or $40,000 deduction, which could be, that's a lot of money.
Yeah, absolutely. I mean, you said $40,000 deduction on a $100,000 or $200,000 a year. So that's what, 20 to 40%.
Right. When it's a big number.
Yeah.
So, another thing is people having what I call audit paranoia. If the government says you can do it and you document it, do it. Don't be so worried that you're going to get audited. The actual people that actually get a full-blown audit are very, very small, and more likely you may receive a notice. And if you're doing it correct and you document it, you're okay. Another thing we talk about is having the wrong retirement plan. Have you made any plans for that? How do you get your biggest bang for the dollar? Doing choosing the correct retirement plan. Another thing is, missing medical benefits. Certain types of entities, if they're structured correctly, you can have what we call a medical expense reimbursement plan. So you could write off dollar for dollar your medical expenses versus having to take a percentage of only a percentage of your medical expenses. So that's something that's really important. Having a home office, if most business owners I know spend easily 12 to 15 hours a week at home doing, whether it's billing, marketing, emails, whatever it is. And if you have a specific space in your home, you should be taking a home office deduction. And while that deduction itself may not be very large, it opens the door for a lot of other types of things like travel. Now you're moving from one office to maybe a warehouse, that becomes deductible. It also allows you to have what's called a home athletic facility, which becomes deductible. So that could be your pool or your home gym. Now that becomes deductible. So just taking a little bit of time to plan can save you a lot of money.
That's interesting. That's actually interesting. A lot of the, how I said in the beginning that, being Canadian, I don't know a lot about the U.S. tax system, et cetera, but there are a lot of similarities in what you're speaking about right now that I've come across with working with my accountant as well. but please do continue.
So we had the medical benefits, the home office. How about hiring your kids and hiring your spouse if they're doing work for you? So right now, depending on where your income level is, based on the new tax law, if you have your kids working for you, they could actually make about $12,000 a year before they have to pay any taxes. And once again, if you're set up correctly with a certain type of entity, you might even be able to not pay them FICA and Social Security tax, which is like 15%. So then it becomes a real home run. And so we have a lot of clients that they'll pay the kids under the old bill, maybe $6,000 a year, and it's got to be something that they're getting the appropriate pay for. You can't pay them $100 an hour to lick stamps, and you need to document what they're doing. But then the kids could take that money and they could put it into a Roth IRA, and by the time they're, ready to retire, that money is going to be worth a lot. So hiring your kids, hiring your spouse, putting that money into a 401k or something like that is definitely a way to go.
I actually have a question on that.
Sure.
When it comes to hiring kids, now again, like I said, I know that there's different legalities, etc., across the border, but I'm curious just what age that the kids would have to be.
So tax court has ruled you can hire your kids as young as 7. I typically advise clients, unless they're using them for modeling and stuff like that, that they should wait till they're about 11 years old.
Okay.
Yeah. So wait till they're about 11 and you have to pay them the appropriate, sum of money. And it's a good way to turn, maybe something that might not be deductible into deductible expense. So like when my kids were younger and they went to a private high school, they worked for me. I put the money into their bank account and then their tuition came out of their bank account. And it basically made that tuition for me tax-free tuition. So you could save a lot of money.
Well, and I like the other aspect of making them, there's the other side of making them work for their money too, and that's just the personal thing that I've always been big on. I mean, my kids are far too young right now to realize even the value of money, but to realize the value of hard work and that sort of thing as well. I mean, it's totally aside from the tax planning and tax benefits, obviously, but
right.
I was just curious though as to when it would be, when you can start hiring them for the tax purposes and that sort of thing.
We typically advise people to wait till they're 11 years old, and then they need to document everything they're doing. When they come into the office, they sign in, they keep a list of what they're doing. When they sign out, they get paid just like everybody else gets paid, and the money goes direct deposit into their account. You can't wait till December and pay them because nobody else would work with you if you didn't pay them until December.
Right. Exactly. That makes sense to you. Right on. All right. So that was hiring kids and hiring your spouse.
So then we have missing car and vehicle expenses. If you're using your vehicle for work, for business, document it and take the deduction that you're allowed to take. And then we have the old meals and entertainment, which is another thing that was changed by the tax rules. And I tell people if it's a meal and you're talking business, you could write it off. The government lets you deduct 50% of it. Entertainment is a little trickier. So you have to be careful with that under the new tax law. You can't buy tickets to a game and fully write that off anymore. It doesn't work that way. So, but meals are a big thing. And then really I guess the last piece is, what I always say is missing my help or missing the help of your CPA. Communicate with that person. If you're only speaking with them in March and April, there's not a whole lot they can do for you. They're probably really, really busy. They don't have a lot of time, but talk to them throughout the year.
Yeah, I think that's an important lesson just in business in general, is just to keep in touch with specific individuals. Like you said, as an example, you used the doctor as an example and your need to communicate with them when you're not feeling well or what have you. But I think it's even more proactive in business if you're more valuable in business if you're proactive and you're planning your year, for example, and you sit down with your CPA and you get, for example, you said meals and entertainment, and I'm going to use that one because it's a very common example because a lot of people write that off. But if they're meeting with somebody and they're talking business at all, write it off. But it's important that you, in some cases, it might be important that you note what that meal was about or what you talked about at the meal, just in case, like you said, the audit paranoia portion of me pops in there. But I think you also talked about documenting things. And so I think as long as you know, at the highest level, you know what the areas are to focus on, that's important. But it's also important to have like you said at the very beginning, a plan. And so the only way to really plan, I would assume, would be to, sit down in the beginning of the year, plan your year out as best as you can, and then have some level of regular check-ins.
Exactly. We like to talk with our clients, like on a monthly basis, but you want to do it at least on a quarterly basis.
Right, and that makes a lot of sense. Especially when you're talking about, well, like you mentioned, anywhere from 20 to 40% in savings. The cost of sitting down with your CPA is minuscule in the end when you really think about the savings it's going to generate for your business. So, excellent. Do you have any other thoughts in that regard? And are these the topics that are covered in your book that you're giving away?
Yes, those are the topics that I discuss in the books in a little bit more depth. And like I said, we'll give you a link for that, and your listeners are welcome to have it. Perfect.
And now what I'll do is I've got a lot of your contact information here, but I would like for you to share with everybody two things I like to end the show on typically. And typically it's, do you have any parting words of wisdom? So any final thought, any final words of wisdom for all the listeners out there? And then what's the best way that they can reach out and get a hold of you?
Okay. So my words of wisdom is, as I've hit on before, is, you need to communicate with your CPA or accountant. You need to work to keep more of what you're making because you're working really hard. And the best way to get in touch with us other than our website is via email, which is craig@ccodycpa.com. And our phone number is 516-869-4051. And we're in New York, but we have clients as far away as Oregon. So the internet's a wonderful thing, as we've all realized.
Yeah, I was going to ask you about that actually, and that is, I know with law firms, for example, they can't practice outside of their own home state, but I'm assuming that you can provide your services across
Correct.
the United
Correct.
States?
Yes.
All right. Excellent. Okay, well, thanks, Craig, for being on the show. I think people have benefited a lot from these 10 points that you talked about today, and just kind of, I don't know, just hearing from a CFO, a certified accountant, and a CPA, and on a show like ours, it just kind of really puts more of a personality behind it, and it also adds that value that people, that realization that it really is of value to communicate with people's CPAs on a regular basis. So appreciate your being on the show today.
Well, thank you very much for having me.
You have to trust that the dots will somehow connect in your future. You have to trust in something. Your gut, destiny, life, karma, whatever.
Stay hungry.
Hungry. Foolish. Stay hungry, stay foolish.
This is the eCommerce All-Stars podcast, brought to you with heart by Nadimo.com.